Everything we say, do, or make starts out as an idea. Like literally everything we touch, think about it, it's an idea before it's anything, right? And the purpose of the world economy is to generate and share useful ideas through trade. As we trade, our ideas become better, giving everything we say, do, or make more specialized qualities. An easy way to think about this is considering how like our transportation technologies have gone from wagons to automobiles to airplanes. And so in trade, everything is valued at some ratio of everything else, meaning that this car might be worth 132 chairs, or this house might be worth 11 cars. And money is the medium through which we more easily calculate these exchange ratios. Like any other tool, the purpose of money is to save us time. And generating time savings itself is the purpose of all tools. So for instance, we can dig more holes per hour using a shovel than we can with our bare hands. And in this sense, money is just a tool that helps us negotiate and execute trades more quickly. Mm-hmm. So it's the medium through which economic actors communicate their preferences, which drives human action. And what this means is that, like, by choosing to buy a car or sell your house, the economy responds dynamically by producing more cars and less houses, essentially. So contrary to popular misconception, money is not a government creation, which I think most people are under that illusion. The simplest way to think about this is that money arises naturally in any trading society. It is simply the most tradable thing. So as people seek to satisfy their wants through trade, they steadily seek to trade their things for more tradable things to get closer to the thing they ultimately want, right? So as this dynamic unfolds, something necessarily becomes most tradable or more tradable than everything else, whether it's salt, cattle, or gold, and this most exchangeable thing is money. As societies advance historically, they coalesced around precious metals as money due to their superior monetary traits of durability, divisibility, portability, recognizability, and most importantly, scarcity. So durability means it persists across time, so it won't physically deteriorate, which metal is really good at. Divisibility means it can be broken down and recombined into various amounts, so you can easily calculate and trade things, also which gold is good at in the form of coins. Portability means it can be transported across space, so you're moving value across space. Recognizability means it can be assayed or verified by someone that's trading, so you can actually tell that it's actually gold or cash. And then scarcity is just limited supply, which makes
creates value.
Yes, so scarcity is of primary importance because anyone that can compromise that supply will do so to steal the value stored therein, so which we do with fiat currency today. So gold, which is the most scarce monetary metal, came to dominate the world as its supply is the most inflation resistant or inelastic. Governments co-opted gold, and over time they built a pyramid scheme on top of gold called fiat currency. When I say it's co-opted and I call fiat currency a pyramid scheme, it'll help to define a pyramid scheme. So a pyramid scheme is essentially a business structure in which those in higher tiers steal value from those in lower tiers. So fiat currency is a pyramid scheme with central banks at the top who hold the only real money today, which is gold, that generate profits by making loans to successive layers of banks below them, with each layer profiting from the loans it makes to the subsequent layers of banks below them. And the people using the currency at the bottom of the scheme get stuck holding the bag, so to speak. So it's a leverage-based business that requires steadily more debt accumulation to remain functional over time. And it inevitably breaks down when the debt load becomes unserviceable, which I would argue is happening in the world today. Mm-hmm. So when governments commandeered the market for money, it became unfree or centrally planned. So we moved away from a free market, which we'd call capitalism, to a centrally planned market, which is something more akin to socialism. So in this sense, free markets are natural organizing principles that encourage us to find better ways of doing things by making bets with one another. So as we can prove others wrong in the marketplace by finding and selling better ways of doing things, the productivity gains diffuse into society through trade. These gains come in the form of better ways of saying, doing, and making things. Said differently, productivity gains come from more specialized ideas, which come from trade. So in this sense, free markets are idea meritocracies, which we're going to talk more about here in a minute. Free markets are essentially unhampered trade networks that encourage the cultivation and diffusion of the best ideas within society. All regulations and limitations on free market dynamics reduce their efficacy. The ultimate expression of regulation is a monopoly in which all free market competition is suppressed through coercion or violence. And in the world today, the market for money is not a free market. It is forcibly dominated by banking cartels.